More homes, less FOMO. What's next for Vancouver real estate? More homes are hitting the market. Buyers finally have options. I'm Christine Copper with Sotheby's Realty in Vancouver, BC, and let's take a look at how January's numbers fared and what's happening today in the February market, since we're in the middle of February already. I'm a little bit behind on posting this month. My apologies. It's been a busy month, but that just shows the spring market is very active and it's gearing up to look like a very interesting spring. I myself am very positive and hopeful with the activity that we start to see at the tail end of last year, that it will cycle and continue through into 2025. Now, we do have one big topic that's come up is all the inventory that's come onto the market, a lot more than we're used to seeing, and we're going to dive into those numbers, and as well as this on again, off again with the tariffs, and of course, that potentially impacting buyer psychology and market confidence. So let's take a look at the numbers and get right to it. More listings, more choices. Let's take a look how things turned out. We're looking back to August of 2024, reporting on January's numbers now that they're out. January clocked in 1,552 sales. That is down month over month, 12% from December. However, it is up 9% year over year. This is in line with these increases we saw in sales in October, November, and December. They were up substantially, double digit from the year prior, and we're starting to see that increased activity in January as well this year. So this is very positive news. Now, 1,500 sales is still 11% below the 10-year average, but this is also a metric that's improving because for the majority of 2024, we were sitting around the 25% below the 10-year average for our overall look for Metro Vancouver. Now, I should note, we're looking at Metro Vancouver numbers here. This means that we're looking at the aggregate numbers between Whistler and Maple Ridge and everything in between. We will take a look at Vancouver West and East specifically later on. And of course, if you are wondering about your own market segment or your own real estate situation, please reach out to me and book a time so that we can have a consultation about your specific situation. I'm happy to chat. Back to new listings. This is one of the key topics that popped up last month is 5,566 new listings came online in January. That's a significant amount. It's also over 200% over the listings for the month prior in December. Typically, January tends to be a little bit of a quieter month, not as quiet as December, but a bit more quiet. And obviously, you can see we had a surge in listings in January. It's almost like the spring market, instead of coming on in March, April, May, decided to all list in January, which traditionally some of us like to take advantage of when there's less competition. So that's a substantial increase month over month. It's also up 47% year over year and 31% above the 10-year average. So new listings and overall inventory is going to be the name of the game this spring. Well, there's going to be three topics, of course: overriding inventory, the amount of supply that we have, the demand, which seemed to be coming. And of course, so many people have been on the sidelines and interest rates have been decreasing. So we're starting to see that uptick. But of course, the third topic is the tariff war that's been coming up in the Canadian economy and in the forefront of everybody's minds. And, you know, one day it's on, one day it's off, and the potential impacts of that on our economy, which I would like to talk about a little bit more later on. That is going to be the nature of the game for 2025, seeing how this all pans out. But what we do know is this January started off with a bang with a supply of new listings. Buyers have more choices than they've had in years at this point in time in the year, which is just the beginning of our spring market. That's very good. And remember, buyers aren't just first-time home buyers, but oftentimes sellers that are going to be downsizing or right-sizing or divesting and making a move somewhere else. They need options in order to be comfortable to list their homes. So this is good news in terms of inventory and choices for those of you that are having change or thinking about making a change in your lives. Now, total inventory. So this is the total amount of inventory available at the end of January, standing at 11,494 available listings. That's up 10% month over month, up 33% year over year. So that's been the trend, as we've had elevated inventory than usual, and it's 33% higher than the 10-year average. So you can see we are a bit out of our typical band of our usual amount of listings. But remember, Vancouver's market tends to be a low inventory market, and historically over the last 10 years has been in a seller's market more times than not, and mainly because there has not been enough inventory to satiate a demand. So anybody that has ever thought about, man, I wish I got into the market at some point in time in Vancouver, well, guess what? Here is the opportunity to finally have some choices. May not be exactly what you're looking for today, but there is less competition, less craziness, so to speak, FOMO, right? And now you have the opportunity to actually enter the market and go through the process, generally speaking, at your own pace. Of course, good product is selling. And speaking of which, we're going to talk about prices here in a second. You can see the benchmark price actually had an uptick month over month, albeit it's less than 1% increase, so it doesn't really show up here, but you can see we start to have a little uptick in the overall benchmark price, and we're up 1% year over year. So if you've ever thought about entering the market and you're wondering about where was that the bottom, it is very possible, and I felt this last year, that we had finally started coming out of what I perceived to be the bottom from this massive change in interest rate increases, a lot more inventory than we're used to for a host of reasons, between higher interest rates for some, new Airbnb policies, and the investor bid for those that owns investment properties renewing into the higher interest rate environment, which has actually improved substantially since, like, say, even a year ago. There has been an accumulation of inventory, which is exactly what everybody had asked for. So now it is healthier levels and easier for market participants to play. And last but not least is months of inventory. So for those of you that follow me every month, we always report on months of inventory because it is a sign of supply and demand. A more granular calculation is sales to actives ratio, which we're going to go through for specific Vancouver and East and West segments. But for the overall market, you can see January ended up with 7.4 months of inventory. 6 months and above is considered a buyer's market. So that band between 4 and below is a seller's market. Balanced, and 6 months above is buyers. 4 months below is sellers. And you can see that January we've crept into buyer's market territory, and it's because the sales have just not been able to keep up with all of that new inventory that came on in January. Last year, August, we hit 7.3 months of inventory. That was probably one of the best times to be buying before October, November, and December, when the sales really picked up. And being that we can see that trend continuing on from last year, this might be, again, if we're thinking that things are going to continue to be strong because of the pent-up demand, lowering of interest rates, improving CPI, and just people tired of sitting on the sidelines, I think we're going to see a continuous improvement in our sales activity. And it's just going to depend on how much new inventory comes on in February, March, and April in the spring market. Or did we pull some of that inventory over, or is there more to come? And because that can really damper things. But then again, that could also lead to opportunity for those of you that prefer to not be in a FOMO kind of market. So that's just something to think about, because look how quickly that changed even in this fall market, which was the tail end of last year. It's the second busiest time of the year, and it really tightened up and we fell into this more balanced level. Overall, the market seemed to improve. Again, I don't want to speak like it was going gangbusters, but it was improving, and you can see the demand coming back, which then continues to support those prices, and in fact could roll over into eventually increasing prices. All right, let's get to some of the other data that we have for you. Generally speaking, for overall Metro Vancouver detached homes, sales are up 0.3% year over year, so increasing. Your benchmark sitting at about $2 million. It's up 3.2% year over year and up 0.4% month over month. So like I said, feels like we're locking in that bottom and starting to turn the corner. And of course, the detached market has been performing well throughout this entire process, give or take. It's more of the attached product that, particularly condos, that have taken a bit more of a softening. Now, attached townhomes sales are up 12.6% year over year. You're sitting at 1.1 million, up 3.7% year over year, and down 0.8% month over month. So that's basically flat. Condo sales are up 13.5% year over year, sitting at 748,000, down a half a point year over year. So basically flat and down month over month. So you can see the overall trend is a little bit of a softening in that condo market. Vancouver West detached homes sales are down 10%. Your benchmark price is sitting at 3.427, up 3.8 year over year and up 1.6 month over month. So Vancouver West is a winner in that particular segment. Townhome sales are up 100% year over year. Your benchmark price is sitting at 1.477, up 2.1% year over year, but down 3.3% month over month. So might be your opportunity there. And condo sales are down 2.2%, sitting at 810, and down 2.4% year over year in terms of price, and down 1.1% year over year. So you can see that downward pressure on those condo prices. Vancouver East sales are down almost 19% in the detached segment, with your benchmark sitting at 1.841, up just 0.1% year over year. So flat and down slightly 0.8% month over month. So staying flat. Townhome sales are down 8%. You're sitting at 1.140 for price, which is up 7.8% year over year and down just a tad month over month or flat. Eastside condos sales are up 6%, sitting at 696. Your benchmark is up 0.6 and month over month 0.9. So again, it's flat year over year and month over month. So hanging in there for your Eastside condos. I'm Christine Copper with Sotheby's Realty in Vancouver, BC. If you are wondering about your own market segment or your own real estate situation, please reach out to me and book a time so that we can have a consultation about your specific situation. I'm happy to chat.